Welcome to the day 4 of the Financial Fitness Challenge. Yesterday, we looked at how you can launch and grow your business empire. And today, we're looking at how you can multiply your money through investing. Remember that there are 3 essential skills for financial fitness. The first one includes the skills for making money. The second one includes the skills for managing money, and the third one includes the skills for multiplying money. So it's not enough to just make it, and it's not enough to just manage it. You also need to know how to multiply your money, and the quickest, surest way of doing that is through investments. Through investment, you can make your wealth grow significantly, of course with patience. Okay, and so there are 3 things to focus on. The first is developing the mindset of the investor. It is always important that you start with the right mindset. Many people are not succeeding in their investments because they approach investing with the wrong mindset. So that's the first part of it. The second part of it is developing your own personal investment philosophy. Because you see, the way I invest need not be the way you invest, because our goals might be very different. I might have long-term goals, but you might have short-term goals. And of course, it's important to understand how much risk, because you cannot discuss investment without discussing risk. And then the third important step is to go ahead and build your investment portfolio, because you have to make a decision around what exactly are the things that you're going to invest in. There are different kinds of assets, asset classes, real estate, stocks, bond, mutual funds, ETFs, and so many. And so you want to make that decision on exactly how to build a balanced investment portfolio. So first of all, let's start talking about thinking like an investor. But there are 4 quick misconceptions I want to quickly dismiss, before we go on. So 4 misconceptions. One is that investing is only for the rich. It's only for those, who have a lot of money. But the truth is, it's accessible to everyone, even with the smallest amounts of money possible. And this has kept so many people from investing, because they believe it's only those big names, the Warren Buffett, Elon Musk, Dangote, Otedola, Tony Lumelu, all those big people. But it's actually very, very accessible with very small amounts of money. The myth number 2 is that you need a lot of money to start. So lots of people are waiting until they have 1 million, 500,000, 5 million before they can start. No, but even with 500 naira, believe me, or $500, depending on the country you're watching this from. So it's always about starting right now and also being very consistent. It's not about the amount of money. The third myth is that, investing is too risky. But tell me, even life itself is risky. But the truth is, you can manage risk by diversifying and choosing low-risk investments like mutual funds or like indexes. All right. And then the 4th myth I want to quickly dismiss is I need to be an expert to invest. So I can understand why it feels so overwhelming for lots of people. People have not invested. People have been wanting to invest. Some people for 5 years, for the past 10 years, but they just do not think that they have the expertise, and they do not know the first step to take. Truth is, you do not have to be an expert to start, and you don't have to wait until you've read 100 books before you start investing. There are beginner-friendly platforms and assets you can start with even today. And then the key thing is to learn as you go. Up to today, Warren Buffett, in his 90s, still read every day. That is from his own mouth. That's what he said. All right. So let's look at the mindset of the investor. Because the investor doesn't think like ordinary people. So first of all, they think like owners. The investor has ownership mindset, ownership mentality. So they take responsibility for their future. They do not wait for the government. They do not wait for their uncles and aunts or family member. They take responsibility for their future. They take responsibility for their retirement. They are not waiting for their children, to grow up, become a politician, and then support them. Number 2, the investor thinks long term. It is impossible to be a good investor or to reap the rewards of investor if you do not have the mindset of patience. It's a marathon, it's not a sprint. So you focus on sustained growth over time, not quick wins. Number 3, the investor mindset is forward focused. They are not consumed with what is happening in the markets today. So many people are, just so anxious, so stressed, so schizophrenic about what is going on in the economy. Oh, there's inflation, there's devaluation, there's that, the world is going to collapse, World War III is coming. Not for the investor. The investor is not consumed with that. Okay? They are forward focused, not what is going on today. And it affects their moods and so they are not led by their moods. They are led by their plans. Investors also think with expectation. So they have strong belief that their investment will pay off over time. So even when there is a temporary downturn, they still believe that over time they would have success. Investors also think fearlessly about risk. What risk does to the ordinary individual, to the ordinary people? Oh, it's risky. So what do? They hide their money under the bed and it keeps losing value. But the investors don't avoid risk. They embrace it and then they use it to their advantage. Because many times it's when people are afraid to invest that investors actually invest, and then when it does well, it does really well. Okay? And then investors see money as a tool to create wealth and also for impact, to help others. It's not for showing off. All these things you people see on social media and people are coming there spraying money, displaying ostentation. Those guys are not investors. Money may have just missed road and entered their pocket, temporarily, or they are doing something that they are not telling us to be able to carry bundles of thousands of dollars, and they are spraying and showing off. And then unfortunately, poor people envy them and think that is what they do. But you will never see Warren Buffett. You will never see some of my rich friends, in this country. Some of my very wealthy investors, you will never see them where they are dancing and throwing money at people. Never. And to shock some of you. Okay. So, why invest at any age? Doesn't matter whether you're 25 or you're 40 or you're 50 or you're 60, approaching 60, like myself. Why invest? Number one reason, that is the surefire way of reversing financial stagnation. Because the truth is, all the financial struggle you are having today is due to the fact that you didn't invest yesterday. And all the financial struggles you will ever have in the future is because you're setting it up today by not investing. So investing is paying your future self. It's paying your future self, not just consuming it today. So it's like giving a gift to your future self. Number 2, you invest because that is one means of building generational wealth. It's the most trusted vehicle to create financial independence, not just for yourself, but also for the family that you're going to leave behind, for generations of the people you love. Number 3, investing is the key to generating passive income. Passive income always allows you to fund the lifestyle that you desire without having to work harder. I was listening to a 70-year-old woman on Dave Ramsey's program yesterday, and it was so sad. She's 70, she's cleaning homes, the husband is bedridden, they do not have anything saved for investment. I almost cried when this woman said that what I do is physically demanding and that she does not know how much longer she can do it. This is what investing does for you. Also, number 4, investing helps to prepare for life surprises. Life has a bit of unpredictability, and unexpected financial challenges, health emergencies, and things can arise at any time. Investment comes to the rescue. Finally, investments help you to fulfill your purpose, your God-given purpose. It's not just about money, but you see, you need to fund your purpose. And so it's about aligning with your core values and using your wealth to live a purposeful and impactful life. Okay? So the most important step in investing is educating your mind daily. So that's very, very important. So let's talk about how to develop your personal investment philosophy. This is probably the most important exercise you will do today. Now, the question that I get all the time, and that you find it all over the place, is what should I invest in? People are asking it every day. What stock should I invest in? Should I invest in real estate? What should I invest in? And there's no one answer that fits all. I cannot just look at you and say, go and invest in this, because it's got a lot of considerations. Because I don't know what your financial situation is. I don't know what your risk tolerance is. I don't know what your goals are. So it's going to be difficult to just give everybody, I say, just, invest in this particular thing. So that's number one. Second reason is, like I said, I don't know, it will be determined. That question will be answered by a combination of things. What are your financial goals? Are you investing, for instance, for retirement, or for your education in the future, or for building wealth? Or is it for generational legacy, which is essentially what I'm doing right now, generational legacy, because I don't even eat 3 times a day. Most times I eat once in a day. So it's not like I need to eat, too much food, and I don't need, at this time, I don't really need to buy like a very expensive car or to live in expensive neighborhoods, So my financial goals are totally different from yours. Number 3, understand your risk tolerance. Can you handle very high risk investments? Are you the type of person that if you put money in an investment today, you won't sleep for the next 6 months? Every night you need sleeping tablet to sleep. Yeah. The other thing is the time horizon. What time horizon are you looking at? How soon will you need to access your money? So these are the things that determine what you should invest in. You also think about diversification. A healthy portfolio includes a mix of asset classes in order to balance your potential risks and reward. And generally, the higher the risk, the higher the returns if you make a return. But if you don't make a return, it's going to be a very heavy fall, like thud on the ground. So you have to consider diversification. And then also liquidity. How soon can you access your money? Some investments you can actually quickly sell, convert to cash. I mean, if you have gold, maybe, then some stocks. I think you have to wait, like in the case of Nigeria, you have to wait for like 3 transaction days and things like that. But in other parts of the world, you might actually have access to the funds immediately. Some online businesses, you can get your money like almost immediately or something. All right. Forex, you can get your money like almost immediately. So you have to consider liquidity. So then another consideration is matching your investments to your values. Ethical investing. For instance, some people say, well, I don't believe in alcohol. I'm very strongly opposed to that. So I'm not going to invest in breweries and things like that, So you have to think about matching your investments to your values. And then when all these things fail, that's when you need professional guidance. But here is how I handle this question. Here is how I best handle it, because that's how I handled it for myself. I couldn't always every time go around asking people, what should I invest in? And then, to be honest with you, many times I asked that and did it. It didn't turn out well. That's how somebody actually led me into Nospetco, and I lost thousands and thousands of dollars, doing Nospetco at that time. And it was somebody, who pushed me into it. And so what I now did was to create an investment philosophy that will form the boundaries, that will guide me, that will form a sort of filter for the things I invest in. And then that gave me investment independence. Okay, so here are my investment philosophies. Okay, so let me take you through them. You can adopt this, and you can also use it, model it to create your own. So the first is, I invest in my mind every single day. Every single day, I listen to audiobooks, I listen to podcasts, I read at least 3 to 4 hours every single day. As busy as I am, if I'm driving, I'm listening in my car. So if I'm driving between here and then the next city, and it's going to be 1 hour, that's 1 hour of audiobook. Okay, and then everywhere, like around me on the table I'm using here, there are books I need to read and highlight and act on for the day. So invest in my mind every day. That's my number 1 investment philosophy. Okay, number 2 is to invest every portion of my income. If anything comes, if it is 5,000, if it is 10,000, something is set aside. Like, I aim to put money in my investment account, no matter how small, every single day. And when I can't do it every single day, I must do it every week. When you can't do it every week, you need to do it every month. So, but the goal is you never consume everything that comes into your bank account. My third investment philosophy is to own the things I use, all the essential things I use. Okay, so I use phone and I use data, so I invest in telecommunications. I eat food, though not processed food, but I know people eat food, and I drink water, so I invest in food. I also invest in energy, I invest in technology, I invest in the finance sector because I use these things. So many times when you're complaining about the bank charges, I'm not complaining about bank charges, because anytime the bank charges you, I make money because I own the bank that I use. I literally own the banks I use, all of them. And then number 4, I invest only in what I can control. So I focus my investment on areas where I have influence and where I have deep understanding. Whether it is stocks, real estate, or businesses, it must be something I know well. Every time you invest in something you do not understand, you are 99.9% certain to lose that money by law. Okay, so and that's why if you must invest in anything, if you want to do forex trade, if you want to do stocks, you must invest in understanding it. Understand how it works. Otherwise, you will lose that money. Number 5, I play in the financial market, so I aim to earn through investments rather than relying on my labor on other people's labor. So my plan is to use, or my philosophy is to use capital to generate income rather than use time or effort or energy to generate it. I want to use capital to do it. I really wish you understand how deep that is. Because a lot of us, when we see capital, we think capital is something that we spend to pay bills and meet our needs. But capital is actually a money multiplying tool. It's a seed to multiply your wealth in the financial markets. Number 6, I avoid get-rich-quick schemes like a plague, because get-rich-quick schemes have dealt with me. So I avoid it. I stay patient and unfazed. Whatever is happening in the world, I stay patient, I stay unfazed. People are predicting all kinds of doom and all that. I still invested yesterday. I still bought stocks yesterday. I am still buying today. Okay? Stay patient. Be in it for the long term. I play the long game. I don't just put it today. And I don't trade. I trade minimally. And then you need to know the difference between trading and investing. They are two different things. And number 8, I control my emotions when it comes to anything money, because money has is a high energy substance. It can mess you up. So I maintain discipline and emotional control in my financial decisions, ensuring that my investments are guided by logic, not by short-term feelings. I bought Nestle at I believe 1,000, when it was over 1,100 or something like that. I bought quite some significant, and then that stock has been declining over the past couple of months, and I have been quite emotional about it. See, but there are other very promising stocks that I could actually have put that money into. So I just decided yesterday so now Nestle has fallen from where I bought it over 1,000, about 1,100 to 850. When I look at the delta and the loss, it's so painful, but I have to keep emotions aside and say, listen, I looked at Nestle's result. It's not looking very good. So it doesn't look like that stock is going to rally anytime soon, like in the next 1 or 2 years, when they have to turn their performance around. And so I'm not being emotional. I'm going to make a loss, and I've put the Nestle up for sale so I can put it on something else that is much better on the long term. So these are my investment philosophy, and I hope they're very useful to you. I hope it's valuable, because you can model this when you have this. So what this does for me is when somebody comes and says, oh, boy, let's invest in this, let's do this. I look at it. This morning, just before I did this, somebody sent a message to me, oh, crypto. That is this platform they call Metaforce. I want to teach you, to introduce you how you can be making $10,000 a day. A young man, maybe of 20-something years. Now, with that, look at my investment philosophy. Look at it, you're seeing on the slide. Oh, come, let me introduce you a platform. You'll be making $10,000. Does it violate this philosophy or not. Type in the comment section which of the philosophies does that so-called investment violate. So you see how it's easy for me to automatically make that decision. All right, because if you answered correctly, it is my investment philosophy number 6. Okay, so I need you to create your investment philosophy as well. And then put all your questions together and everything you would like to know about investment, so that when we meet later this evening, we can get a chance to have some very, very real, practical conversations around multiplying your money through investment. And then whatever happens, keep showing up, because you have no idea what's coming your way next. And I'll see you later this evening.